And we'll go to countdown. And my heart starts to pound. Trading podcast in my ears. Okay. And let's put up the chat. We're live. Do not disturb. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Plug in my daily, don't miss a single show. Sign up for the newsletter that'll help you grow. Taking risks, making moves, pin message. Together we'll conquer, no room for any less. Listen over to here. And hit the thumbs up button. I'll be right there. Oh, I thought it was 8:35. God, I was rushing to get on here. I do have to rush though. I'm the only one on here though. Trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Let's see. Big show. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Oh, this is good. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Let's go over here. PD. Pager duty? What interests you about pager duty? Michael. Let me know what interests you about pager duty. Michael Anthony from Van Halen. I thought you had a Vegas residency. Morning, Wendy. I mean, what interests you about this one? Is it a trade for you, or is this an investment? Larry, that would be my question to you. Is pager duty? Is this a something you're investing in, or you say the last 3 days? Even though the Wall Street price target is 93% above where you're trading today. Hey, Jolene. Bob Kavas. Jolene Bob Kavas. Thank you for listening. I appreciate you listening. There's a lot of red on the board today. A lot of red. God, Microsoft. And I was watching Chris Camillo last night. He's saying that Amazon is just, good God. He's like, how can you not just buy Amazon over and above? This is what annoys me. I checked this. I checked this one, that damn link. Morning, Riley. Morning, K. Josh. Yeah, I checked that damn link. And I'm not going to go back through my likes from 2 days ago. I'm going to take this out. We'll take this out. I was trying to make a point. There was a guy who lost everything. Let me see. Does it come out with the compound and news? Yeah, see, that's not what I was looking at. That's not the point. There was a guy who lost everything in crypto. He had made $100 million in crypto. And for some reason, when I take a link from Instagram and put it over to my notes, and I think this is going to be the same damn thing. No. Okay, this one's good. This one I double checked. There's a great CNBC look at NVIDIA, the new AI system that they're launching, which again I think is going to blow away the street, and we'll go over NVIDIA earnings. I've got my weekly Friday. Here are the strong buys that report next week. Pick your favorite. We'll go over one. In fact, I'm going to go over one right now. This is great, by the way, these 2-minute stock analysis. If you're not watching these things, these are fantastic. Morning, Riley, if I didn't say it. I just had my first cup of coffee. But I drink decaf. So, we're going to go over and do, I'm going to do this once I get, let's do it now so it has time to think. We're going to do a Sidekick message. We already looked at Credo back on, let's see, this was February 25th. I think somebody asked me about this in the, this was the initial look here on January 26th, and it said, don't buy here at 133. Can you give me a Wall Street style analysis? What recommendations for someone who is holding the stock? Should I add more trim? Goldman Sachs just gave it 170 off it. That's probably a good prompt. Yeah. So it gave a breakdown. Here's what I would do. Trim 30% of your position between 117 and 120. Hold 70%. Yeah, that's good enough. Your question, should I add or trim? My answer, trim 25 to 45%. Do not add before earnings. The Goldman Sachs 175 price target is possible. Blah, blah, blah. Yeah, so we'll just use that. I think I'm okay with that one. So I don't have to go over it. But these 2-minute stock analysis are great. The Netflix saga. I mean, this was clear and present. We'll kind of go over that one. The Mag 7, NVIDIA's kind of the only one holding them up, and I don't even know that that's going to continue to hold them up. Great AI winners list right here. Goldman Sachs list of AI winners and losers. This tweet about block earnings. We saw the Citrini, I think it was Citrini on Substack, that Monday thing. Morning, Harold. S&P flashes Hindenburg omen. If you don't know what that is, Hindenburg is typically not something that you use to say, oh my God, it's so good. It's so good. Biggest movers. We'll talk about that. We're going to talk about all the wins that Sidekick brought you this week. Significant ones. And like the title says, $100,000. Absolutely $100,000 in my portfolio. And again, the whole podcast is about me. So we're going to kind of go over this stuff because it was a pretty big deal. We're going to start out with the Netflix stuff because this was something that I put in there as well. Let's see. I know I did. Let's see. Activity. Yeah. Copy link. And we'll put this up here. We'll put that up there. I guess, did I? Yeah. So this is just, Yeah. There was a definite pop. Let me see if this camera's working. There we go. Is an intelligent zoom. I've got my, okay, no. Oh, why did that just shrink? You can see my iPad with my Apple Pencil. My iPad Pro. But I'm going to turn that off. Yeah, we got a lot of red. Is there anything in this portfolio? Coke, Netflix up 7%. Walmart, Exxon's up another 1.5. I can't believe Exxon. Good God. I mean, it's energy, but hey, Riley, I will tell you, NVIDIA was a win for me. I trimmed at 192 a few days before earnings. Just the upside. I mean, that's kind of, I went over this with the paid newsletter subscribers. I think we looked at it in depth, and, you know, I mean, just plain as day, if you thought a $4.7 trillion company was going to become a $5 trillion company, then that was a time to hold on. But I've been saying it before, you know, the weekly isn't like super, super low. Now, if you get back to April kind of style here, where the MACD was below, the RSI came off of 35 levels, and you had that blowout quarter, yeah, I think you could. You know, I sold half my position. Now the and I'll go over this in the podcast, but the decision I personally have to make now is, do I buy back half that position? Or is this just, you know, this range that we're seeing on a weekly? And you can, it's clear. I mean, just look at that 183, 184 right there. Buy below, sell higher. It just doesn't, you know, it's not moving. So does it make sense to take, you know, buy back half my position, or should I just buy QQQ? Because 8%, I think it's 8% of QQQ. And by the way, Michael Anthony never told me what he likes about PagerDuty. My assumption is he's still not here, but maybe he came on just to pump the stock. I have no idea. I mean, honestly, I don't know why anybody would look at PagerDuty, but like this one, you know, QQQ, if we go and look at the holdings, NVIDIA's 8.9% of this. And I get the benefit of all the others, you know, Broadcom, Walmart, Alphabet, Tesla, Alphabet. I don't know why Alphabet's 2. I guess it's class A and class. This is 6. Alphabet's almost 7%. I mean, that's as much as Apple. So that's the decision. Personally, in my mind, I think I'd rather have QQQ. So, but again, that's just, you know, that's part of kind of managing a portfolio, and you're going to make mistakes and you're going to do things wrong and you have to make decisions. And I mean, Palo Alto Networks is a great example. There is no way I should have been holding on to this past that 188. And I still have a good sized position in this. And it bothers me because it's software and it's not, you know, are we done going down with software? Is, you know, AppLovin the big winner from yesterday because software was so good? It's down 4% here. Does it make sense? Yeah, because I do think that 417 is a pretty good support right there. It comes from a previous, I think it comes from a previous, yeah. It comes from that spike up there, and then this spike here, that spike there. So it's got a good level of position. But when you look at where people are holding, and we're just pulling it back to like this spike, and you look at that, where are people holding? They're not holding above. They're holding below. So there needs to be a lot of push to get it back up here. By the way, hit the thumbs up button. Yeah, and Larry, I think the more I read about the options issues with NVIDIA, the more I think it's I don't know if this year it hits 250. If they put up, there is no way that you're growing at that rate. And, you know, those earnings were phenomenal. And even though it has an F, okay, on its valuation, the growth going forward is the PEG ratio is 0.63. Every other metric is really good. And FYI, there's a lot of people taking their estimates up. So it's not like, this should be at a, the real question I think is, okay, going forward, you're paying 22 times forward earnings. I will give you an example. By the way, you're growing at you're paying 22 times forward earnings for 65% revenue growth year over year. 22 times forward earnings for 65% revenue growth. You've got revenue growth on Exxon at minus 4%, and you're paying 21 times forward earnings, and their PEG going forward is 2.29. So just based on a PE valuation, which one would you rather own for the next 5 years? Is it Exxon or is it NVIDIA? And I would choose NVIDIA all freaking day long. But year to date, NVIDIA is down 0.86%. Exxon is up 23%. So the market to me is just confusing in that realm. I don't get it. I don't understand it. It's hard for me to make determinations. And that's kind of why, FYI, I'm relying a lot on Sidekick to guide me as to, okay, I'm holding this. Where do you think the market's going? Because I think Sidekick reads options better than I do. It reads volume better than I do. It reads indicators better than I do. And it takes the emotions out. And again, if you want Trendspider, use the link at Linktree. The link literally is flashing right below my head. It's right there, Trendspider. And you can see the pricing, and you get 25 Sidekick messages a month. And while it's funny because I did go to Trendspider and I said, hey, I'm using like 15 of my 25 on the podcast. And I know they're supposed to be for me, but during office hours, I was getting a bunch of questions about, can you look at this? Can you look at that? Can you look at this? And so I asked Trendspider for enough. And so for paid members, if you ever need me to do something for paid members of the newsletter, if you're a paid member of the newsletter, just ask. Even if you don't have Trendspider and you just want me to look at something and you're a paid member, I'm using those messages to give back a little bit. Because they were nice enough to do it. And they do, Trendspider, one thing that they're good at is they want you to use the platform. So use those 25 messages per month. Don't let them go to waste because they are super, super, in my mind, they're super, super valuable. Let me just make sure I don't have anything on my desktop like old stuff. Okay, there we go. Okay. Good morning, Camilla. Let's go. I'm going to hit record because I got to be done by 10. I got to be off here by 10. Good morning. It is Friday, February 27th. If you didn't listen to Wednesday's show, it was long. I think it was well worth it. This one will maybe long as well because it's another show where there's too much going on in the market for me to be short about it. For instance, Netflix, which is up 10%. Let's say it's up 8% in pre-market. Netflix, they backed out of the Warner Brothers deal. And if you were listening on Wednesday or reading on Wednesday, Netflix may fly after they get out of this deal. Simple, easy. We'll go over this one because you know what? Anytime you have a good company that's trading below its 200-day and you believe in that company, we'll go over this because Trendspider even posted this one prior to the earnings. Look, the MACD is 3 points below its oscillator. The RSI was coming off at 23 levels, completely oversold. This was a dumb moment. And it's not because, Warner Brothers didn't do this. And get it based on just the price. It's $1 a share more. What happened? Well, Ted Sarandos went to the White House yesterday and then backs out of the deal after a meeting with the White House. Guess what? Larry Ellison, major contributor to the president's election fund, major friend. His son runs Paramount. Maybe they told, Sarandos, hey, we don't like what you're doing with your wokeness. And we do like what CBS and Paramount are doing because they're pulling some of our 60 Minutes stuff. Interesting. It's not just $1. And then you have Anthropic telling the administration and the Department of War to go to hell. And they don't want the Department of War surveillance of Americans. There's two things that they don't want happening. It's surveillance of Americans, and it's turning machines into warriors because it's not ready yet. They said it's going to be ready. They just don't want them to do it yet. Those two things. And the Department of War says, no, we're going to declare you an enemy of the state. Even though you're not allowed to go to China, we're going to declare you. So, again, what's the point? Watch the White House. The White House is literally picking winners. So to be a good investor, you need to watch this stuff. I don't care if you agree with me. I don't care if you disagree with me, but you need to watch these things because Netflix was an easy layup. It was rumored out there, hey, this can't get through because Trump doesn't want CNN in the hands of Netflix. And so now where is it going to probably lie? It's probably going to lie with the same. Again, would I invest in Paramount? Probably not. Let's see, Paramount, PSKY. Would I invest in this company? No. They're taking on too much debt. Would I invest in the Warner Brothers? No, because it's at 28. What's my upside? 31. What's my upside? 31. And if the deal doesn't go through for some reason because of financing, this stock is back down to 18 or 19. The risk reward right now is just too little. I don't care about it. It's out of my realm of watching. But Netflix, on the other hand, without that debt, this now becomes super interesting. You're trading, let's see, at 91 prior to open. This, at some point in time, gets back to that $100. It will. Sometime this year, this will be another $100 stock. Look, on the weekly, we talk about this all the time. The weekly, the MACD is super low. The RSI is coming off of 23 levels. It's a good company. And now that they don't have the debt, this one can focus on their growth, and they will grow. It's the only one that I actually pay for. And the Wall Street price target is still 32% higher. And you're going to see these start to come up. It's expensive, but that growth with the advertising tier is going to continue. So we'll see what happens with Anthropic today. You can go and do your research on both of them. By the way, on the Seeking Alpha quiz this week, I got 8 out of 10. So I'm watching the news. And for anyone that thinks that this show is just infomercials, let's go over a few things that I've told you. If Netflix wasn't enough, again, on Wednesday to tell you, and then you get a 10% bop, that they were going to back out of that deal. If that wasn't enough, it's an easy 10, 15% if you did it on Wednesday. You didn't need the tools, just patience. You just needed to understand exactly what that was. So again, Paramount wins. Let's go over another one. Well, Sidekick. Sidekick told you on Sterling. Here's the thing. Sterling, Hey, final verdict, do not buy before earnings. If you do own it, trim it 30 to 50%. Sterling was down 7% after earnings yesterday. This is a stock in the Alpha Picks portfolio that has returned almost almost 400%, I think it is. I don't exactly know. Let me see. 570%. 570%. And it's down another 4% yesterday. It's down another 2%. And they told you, literally Sidekick told you to trim. It did a full analysis of this and said, hey, you should trim before earnings. Well, I trimmed it. Did I do well? Well, yeah, because now I could buy it back significantly cheaper right after earnings if I wanted to. It's not a strong buy in the quant. It's a buy. Wall Street has a price target of 459. Again, this one was trading above 459. It got up to 477. Simple rinse and repeat. NVIDIA. Let's go over NVIDIA. Because if I just go up to my Sidekick here and go to my NVIDIA pre-earnings analysis right here, what did it tell you? The best strategy for February 25th. If you own at 190, start to sell 30 to 50% of your stake before earnings to lock in profits. If you're looking to buy, wait for post earnings between 175 and 182. Again, rinse and repeat. Where is it? It's at 182 today. Let me see if it's broke. Yeah, it's at 182. Rinse and repeat. I sold at 192. I am perfectly willing to buy back at 182 if it interests me. And let's go over another Sidekick that I gave this week. Okay, the pre-analysis of Zoom. Let me just type in Zoom here so we can see it. No, where's the pre-analysis of Zoom? Cypher, DELL, Titan. I think I did this live on the air. Pre-earnings and technical analysis of CoreWeave, stock overview, watch list analysis, pre-earnings of Titan, Sterling, Zoom. Where's my Zoom stuff? Is it not there? Detailed analysis of Circle, Zoom. There it is. I typed it in as Zoom, just not the ZM. Bottom line. The stock is telling you something. Despite 8 consecutive earnings per share beats, Zoom can't sustain rallies. Answer, don't buy before earnings. If you must own it, wait for $75 to $80 price range. Where are we right now after earnings? We are at $73. Pretty good. Again, saving you money or making you money. Because DELL. This is the tweet that I put out yesterday. DELL. Let's go and look at Sidekick and see what Sidekick told us about DELL prior to earnings. I'm going to pull this one up. There it is. DELL pre-earnings. Buy with caution in the 115 to 125 range. Bull case, 70% bull case. 70% bull case. So if you wanted to buy at 115, you could have. AI server backlog, it gave a 30% probability to a bear. Again, that's better than Vegas odds. The wild card, memory chip, that's what scared me out. But plenty of people that were in this in the office hours on Tuesday, they wound up buying DELL and taking the chance. And you are rewarded. This one went from 115 to 135. It is up 11% after earnings. I did not. But again, this podcast gives you actionable, actual like price targets, everything that you need to do. And it's the tools. It's not just this podcast. It's the tools that I look. So again, if you're looking for level-headed, no emotion, some solid fundamentals, good help with strategies, Trendspider and Sidekick is the key. Go to Linktree, click that top link. You'll get over to Trendspider, and you can get 25 monthly messages. Okay, you can sign up for a monthly plan. You can sign up for a 2-week trial. You can sign up for an annual, whatever you want. Again, no emotions. It just looks at everything. And yesterday, in fact, I had it look at the storage again because I wanted to buy a new stock. And so I asked it, can you update the analysis based on recent options activity and everything previously asked? And I got a full look at exactly which memory stock to buy. It's great. It's great. Add it in with Alpha Picks. And if you don't know what Alpha Picks is, it's a data-driven portfolio. And you can get it either by itself or in a bundle with Premium and Alpha Picks. You add Sidekick and these tools together, and you've got a perfect strategy. By the way, the stock that I bought, I put it into Savvy Trader. For anybody, if you want to follow my trades, right down here on Savvy Trader, you can follow my trades. I've got a bunch of portfolios. If you're interested, they are $2.99, I think, each to follow, but you get them free when you sign up for a paid newsletter subscription. So it's an $1,800 value for, I think, less than $200 when you sign up to support me with the newsletter. So again, if you're interested in that kind of stuff, it's great. You can read this tweet. Everything's going to be in the newsletter because the newsletter is free when you get it as part of this daily podcast. So if you have any questions, you can hit me up. But, you know, again, this DELL, I put the thing out there on Substack. Hey, I posted this prior to earnings. I told everybody, want to plan for DELL tonight? This was put in prior to their earnings where it was trading at 115. I asked Sidekick, it actually likes the setup. The wild card is the memory. Bullish for SanDisk, STX, WDC, and Micron. That's why I was doing the memory stock research yesterday. And again, DELL killed it. DELL soars as Wall Street praises unexpectedly strong guidance thanks to AI. The AI story is strong. And by the way, DELL is a strong buy in the quant. When did it go to a strong buy? Let's go back and look. It was a strong buy back here at 132. It was a strong buy back here at 119, at 117. You just needed to find an entry for this one. And then you're up there. What's the Wall Street price target? All of this is in Seeking Alpha. I'm just pressing buttons and going through it. 32% upside. And if you don't know what any of this stuff means, you can get a complete AI summary of DELL right here with its competitors and unique value, all the description of the quant sector, of valuation, growth, profitability, momentum, and earnings revision, and the summary and concerns raised, and you can go and read about Seeking Alpha's virtual analyst report. Again, it's all in there. Now, the biggest movers of the day. This is a very clear sign, by the way. The biggest movers, Block. We'll go over that one. Mara, DELL, Netflix. Okay, biggest loser of the day, Duolingo, CoreWeave, Zscaler. So what do you have here? You have Block. Remember Citrini on Substack, their Monday newsletter that brought the market down by like 4 and 5% with their 2028 outlook of, oh shit, there's going to be 50% unemployment. Oh shit, AI's doing everything. Block last night said they are laying off nearly 50% of their employees. And Jack Dorsey, remember, he was a guy that didn't want Elon getting rid of half of his staff when he took over Twitter. Jack Dorsey said, we are doing this on our terms. It is AI. I mean, he said it in very plain language. Then you have Mara, which is a Bitcoin miner, which has basically said they are going into a strategic partnership with Starwood Group. And they are going to push into AI and high performance computing. Again, AI. They're shifting. And of course you have DELL and then you have Netflix. It's a clear sign. But the S&P is saying, hey, the S&P's 500 to a 20-day range squeeze nears highs, hints at imminent shift. So you're going to get a shift in this market. If we just go and we look at VOO, which is my S&P tracking fund. This is the one that I personally buy. Okay, you're seeing this. Go to a weekly chart. You're seeing it level out here. I mean, we're at levels that we were in October. In October, This was trading at a high of 634. Okay, what's this week's highs? 638. That's not growth. That's sideways. And so the S&P is saying, hey, we've got to go somewhere. So take your pick. Is it higher? Because we've gone over how expensive this market is. Or is it lower? Because we do have extended indicators. We also have a very expensive market. And then you have another indicator, the Hindenburg omen coming up. I didn't even know about this, but when you hear about something Hindenburg, it's not good. They're not saying, oh my God, this is fantastic. So my take here, and it's just from looking at these charts, and I could go and ask Sidekick to do a complete analysis for me of the market, and it would give me, but I think I've got a little bit more emotion and a little bit more invested than Sidekick, so I don't want it telling me to sell just because it's high. I want to create a plan. So my take, I think we have more downside risk than upside hit. Going higher would be something temporary. And you're seeing it today with Netflix. When Netflix said, we're not going to spend on WBD, what did their stock do? It was up 10%. So something like a hyperscaler, something like Amazon, something like Microsoft, something like Google, saying, hey, we're going to pull back on our spending this year because we think we have enough hardware and we don't need to do the spending capital. Maybe that's something. And by the way, they're doing this because Trump's big beautiful bill allows them to write off all that capital in year one. So it is 100% a reason that they're doing this. And the market is saying, we don't like you spending. I think the spending is going to be fine. And that's why, again, I was watching a video last night on Chris Camillo. He is pounding the table on Amazon. He said, this is 4 times your money right here over the long term. He's not short term right now. He says over the long term, this is 4 times your money. And so did Sidekick, by the way. Go and listen to Monday's episode on Amazon and Microsoft. Both of them, Sidekick said, hey, for the long term, you're fine. And don't forget, there's a saying, don't fight the Fed, and you may not hear that enough, but you've got a nomination of a new Fed chair that may not actually happen by the meeting in June. And what happens if he's not nominated by June? You most likely don't have cuts in June. Why? Because we just saw it from Jack Dorsey. He laid off half of his staff. And if you think I'm nuts on this, read this entire take from Stock Market News. Again, read this entire take. Because this tweet explains why XYZ earnings, XYZ, by the way, block, they're up 20%, I think, in pre-market. Let me see. It's 16%. It's been floundering between that. So, yeah, it's a little scary. And Jack Dorsey is literally telling you, he's telling you, they can do more work with fewer people and the company will become more profitable. So yes, those actual companies that cut employees, you may make more money in the short term. But Citrini said it, if we go into a recession, it's not like everything is good. Everything will be bad. But we know it's an AI market, and Goldman Sachs is outlining all of their winners. They're putting Cloudflare up there, which has been hurt, CrowdStrike, which has been hurt, Palo Alto, which has been hurt, Oracle, which has been hurt, Microsoft. This is what buy the dip looks like. Okay? Even Micron. They're saying Micron will be a big winner. Well, we started loading into Micron in August. And I did an analysis here back in December, and it said buy at 240. Where are you today? 415? Let's see, 406. It's been clear. So if you want AI winners, they're saying the losers. Duolingo reported earnings. They're down like 40%. It was a crazy one. Workday swung on their earnings. Good earnings. Not great outlook, but a decent outlook. It went from down 10% to up 4% during their earnings. Again, you're seeing the difference in winners and losers. And if you think that software all of a sudden is bouncing, the market is red today. So yesterday's bounce, dead cat bounce. So where do you go? Because NVIDIA dropped more than 4% despite an upbeat outlook. And the rest of the Mag 7 isn't exactly doing like smashingly well. You know, Amazon down 1 point. We can go and look at the go and you know what? Let's just take the Mag 7 and let's go and look at the year-to-date performance. The only one that's up is Apple at 0.4%. Microsoft is down 16%. Amazon's down 9%. Netflix is down 9%. Tesla's down 9%. Broadcom down 7%. This is year-to-date. That's not a positive move. My take, these companies still rule the market. You're likely going to underperform while they spend. You should have a good amount of these in your portfolio, and you should also have alpha picks. That's my plan. Why? Because alpha picks is growth at a reasonable price. And you need to keep an eye out for things like this. Netflix. This was posted yesterday at 10 a.m. by Trendspider. The reversal will be extreme. Yes, it will. And they're telling, literally the charts were telling you, this needs to move somewhere up. And it said it will be violent. If you buy good companies under their 200-day moving average, and we can go and look at Netflix, a good company, which again, spending was the issue. And if you look at this daily chart, that red line is a 200-day. Good companies under the 200-day provide opportunities. Yes, is it ready to go back to the 200-day at 110? Probably. I don't know when, but at some time this year, it most likely will. So even after the stock, Netflix and Paramount have a lot of ground to make up. The loser is winning on Wall Street with shares of next. Again, that's the market that we're in. It doesn't mean that good news is bad news. We're not in that type of market anymore, like 2022. But we're in a market that's confusing. And remember, alpha picks, this has a proven formula. 293% during the S&P, up 80%. It's growth at a reasonable price. It's a strategy that Peter Lynch ran the Magellan Fund of Fidelity, which had a 30-year track record of outperforming the market with absolutely no down years. Go and research Peter Lynch. Okay? And if you get this bundle, Alpha Picks isn't just the great thing. If you get this bundle, you get to research stocks. You get to do things like Daniel does here with the 2-minute analysis of Vicor, VICR. And where do I get Vicor? Well, from this home page, you can scroll down here and there's top quant stocks by market cap. Vicor is the top stock in the small cap space. When did it go to a strong buy? We can go and look at it. It was at, let's see, 157. Where are you at today? 205. Again, a proven strategy. Rinse and repeat. And those 2-minute analysis that you see, those are fantastic. They just had earnings powering the infrastructure of 2026. Again, what is Vicor? It's AI. It's an electronic and components equipment. It's an industrial. And revisions, 1 up, 1 down on earnings per share, 3 up on revenue, none down. And they just had earnings. So let's talk about another rinse and repeat. I say this all the time. The hack that I've given over the last 6 months is strong buy quant stocks reporting earnings. And it's even better if they are an alpha pick. And so what do you have this next week? You have a couple of alpha picks, including Credo. Okay, CRDO, which is a strong buy in the quant. And so I went and I said, you know what? Let's look at Credo. So I went and did a Sidekick analysis. I asked it, let's look at can you give me an update on Credo? Because I did an update on January 26th. It literally told me, do not buy at 133. Wait for 110 and then or 100 to 110 and then buy it. And what did the stock do? That was January 26th. Let's go and look at Credo right here. Because it was January 26th where it gave me that. It saved me this 25% drop and boom, buy the dip. Well, it's dipping again. So I went in yesterday and I said, let's see, after that analysis on January 26th, can you give me an update on Credo with the current price action and upcoming earnings? What would your recommendation be for someone who's holding the stock right now? Should I add more or should I trim? Goldman Sachs, which is true, just gave it a $170 price target. By the way, the stock is trading at 111. Is this realistic in the next 12 months? Urgent, critical decision point. Major developments since January. Pre-announcement. They pre-announced their earnings. So they dropped that bombshell and boom, the stock pumped up. Classic sell the news. Here's the history of it. And again, Sidekick is analyzing this. So it gives you the current support zones, current resistance. What chart is streaming? Technical pattern, massive disruption phase. Goldman Sachs 175 price target. Is it realistic? Let me address this directly. What would need to happen? Q3 earnings deliver perfection. The product traction, evidence that zero flap optics. And again, it gives you full details of the business. Current valuation analysis. Let me recalculate. Share count, 180 millions. Price, 117. Market cap, 21 billion. Value metrics, Q1 20. Again, revenue estimates, valuation, comparable check, Arista, Marvell, Broadcom. My assessment at 118 valuation is reasonable for growth at 50% revenue growth. It's not cheap, but not crazy expensive. Recommendation for current shareholders, position sizing matters. If Credo is, again, this is the detail that you get with Sidekick. It even looks at options market. It gives you the final verdict. If it's under 10% of your portfolio, hold it. If it's 10 to 20% of your portfolio, trim it. If it's above 20%, you should absolutely trim it. After the earnings, if the stock breaks 130 with strong guidance, hold remaining. Again, this is the game plan for next week. So if you have a game plan, go and make it. My game plan, I'm following what Sidekick tells me. Want to know why? Because I just went over at the beginning how good Sidekick has done. So again, rinse and repeat. That is just using this scanner. The scanner, let's go back to the scanner. Strong buy, right there. The scanner, it's just using this scanner and my Alpha Picks subscription, which I get as part of the Premium and Alpha Picks bundle. And Alpha Picks is that portfolio. We get a new one next week, by the way. I'm just using that, using the tools that I have in front of me. So let's talk about NVIDIA earnings. Why did Sidekick say, hey, you should trim it? And why did it come true? Because Jensen pushes back on AI cannibalization fears in the software sector. He's telling you that it may be time to buy the dip on software. And we saw it pop yesterday. But NVIDIA blew away their earnings. They blew it away. And let me just open this one real quick. Open with Google Chrome. I think I may have it open it somewhere else. But Chris put it perfectly. For everyone wondering why NVIDIA is down to flat after the earnings, number one, top line growth is now moderating. They're growing at 69%, but that was like 80% when they were popping. Okay? So they're moderating their growth. This is one challenge. Number two, comments around shareholder return were a little less than favorable. When asked what the company would do to help boost stock price via share repurchase, leadership expressed they would be extra prudent in capital allocation. They're not buying back stock like Apple. Okay? $200 a share feels like fair value. with an end price target of likely between 225 and 250. I think in a great market, you get to 250 this year. But to buy this one back, the question is, at 182 where it's trading right now, what's my upside? And I would say the cap is between 195 and 200. So if I want to buy this one back or buy something else like memory, the stock surged over 200 after its earnings. It didn't hit the 52-week high. If you go and look at NVIDIA, the 52-week high is 212. It didn't hit 212. It's going to take much more for it to surge past. These earnings were really, really good. The street's worried about the circular financing. We know that. Remember, if you own a good amount of VOO and QQQ owns like 9%. Is NVIDIA. So if you own those ETFs, you may not need to own this one outright. You may be perfectly fine. In my opinion, there are better stocks out there to own until it can push that to over that 200 and hold it. Or it's a viable trade in this range. That's it. And Jensen addressed the software. He said the software issue. He says the markets has gotten it wrong. And that's true. Remember, Tom Lee called the bottom, but I don't think it's the bottom in IGV. What was it up yesterday? Let's see. This is the sector. It was up 2% yesterday, but the quant says it's a strong sell. It just has not done well. You know, you look at this over 1 month, you're down 16%, 6 months down 22%. And what does this hold? This holds Microsoft, this holds Palantir, this holds Oracle, Salesforce, everything that you want to own. And we saw yesterday, AppLovin was way up 5%. We saw it. Oh, by the way, if you want to watch this, before we get off NVIDIA, this video from CNBC is fantastic. It's about the new GPU systems that NVIDIA is doing. And this was just eye-opening to me. So it's a good video to watch. But AppLovin, this is software. And this is what I want to bring up. This one I got out in the 360s, 370s, somewhere in that neighborhood. I think I sold the bottom, to be honest with you. Maybe 390s. It was definitely under $400. And I was like, God, I wish it would go over 400, but I didn't. I didn't get out completely. Why? Because it's an Alpha Pick stock. So I went back to the holding. My Alpha Picks portfolio, it's outperforming the Alpha Picks portfolio, but it's not doing as well as like my parents, which is really just kind of a buy and hold one. So I've learned, hey, maybe I need to trade less. And AppLovin may be one that I want to trade less. Or Amrita's saying, hey, AppLovin is one of the biggest convictions. They got out at $6.37 per share. By the way, the stock is trading at $4.24 right now. They're starting to build their position again. And I loved this article from Amrita and Udom. They did a great job of looking at the trading desk, at AppLovin, and Zeta. Those are the three competitors. That's good. It's a great article. It is a great article. And so I want to bring you to how to wrap all this together, okay? I may have more technical knowledge than some people. I don't know, maybe. There are others that have a lot more. But if you want technical analysis, technical knowledge, okay, this isn't Trendspider. This is Market Rebellion. I think he uses some other charting platform. All of these things, this is 12 minutes. 12 minutes. Find which one you like. Fibonacci, I don't use. Trendspider has it. Breakout, I don't use. Trendspider has it. Reversal, Trendspider has it. Elliott wave, Trendspider has it. Fair value gap, Trendspider has it. Trendspider has all of these things that he teaches. And that's why I love it. The platform is beyond belief. And then if you don't even know any of these things, what do? Go and ask Sidekick. That's the benefit of Trendspider. Your charting program that you're using should have these things in them. I used Active Trader Pro for years. It maybe had half of these. So it's not fantastic, Active Trader Pro. It got me by and I made plenty. But work smarter, not harder. And that's what Trendspider does. It allows you. I spent years learning these things. You can do it in literally a couple of weeks thanks to Sidekick and AI. You don't even need to use the Sidekick AI. Go to your charting program, put it into like Perplexity or Gemini, and understand what the chart is telling you. That's what you can do. So there's an understanding here that technicals are going to play a factor. And you've seen it with Sidekick, doing the Sterling, doing NVIDIA, doing DELL. You've seen it pick bottoms. You've seen it pick ranges, saying, hey, it's a smart place to buy. See if your AI can do that, and it can do it as well as Sidekick, because I just gave you the entire game plan for Credo this week. Trim 25 to 40% now. Do not add before earnings. The Goldman Sachs price target is possible, but unlikely in the next 12 months. A more realistic 12-month target is 130 to 160. And where's Credo right now? It's at 113. So if they're willing to get to, let's see, 130, that's not a bad gain. But where do you want to buy it? At 114 or under 100? And do you want to buy a competitor that's taking some of their business? LITE. Because LITE, we can look at this. LITE year to date, this is one that I put in February 9th at 594. It got all the way up to 765. 765 and 594 was way, way high at that point. February 9th, were you buying into that rally? That rally that just did like 400%. Year to date, it's 83%. 83%. It's not 400%, by the way. That was a thing. Or are you buying Credo? Because Credo's also in the cable business. Year to date, down 20%. But I bought it last year on 2-4. 1 year, you're up 86%. So I've got a significantly, but it's a strong buy in the quant. Wall Street says it's a $208 stock. And they're taking their revisions up. But remember, they pre-announced. Are you going to get a pop? Maybe. Maybe they have some type of forward guidance that pops this stock. So again, it's risk reward, but this market requires tools. It requires some type of intelligence or VOO and chill. I mean, ETFs are perfectly fine. There are plenty of my, this 52-week high. Let's look at the 52-week, just in case you're worried. The 52-week high of VOO is 641. You're trading at 628 in pre-market. It's not like you're in a bear market. It may feel like that, but this is a perfectly fine strategy on a sideways trade because the fundamentals of the economy are good as long as we don't have a Citrini-style block. You know, XYZ, when Jack Dorsey says, hey, we're laying off half the staff. So if you have any questions, again, everything is on Linktree. I suggest finding tools that work, whether it's my paid newsletter and you join me on Tuesdays for office hours, whether it's Trendspider, you get a 2-week trial plan, whether it's premium and alpha picks, whether it's alpha picks by itself, we get a new pick next week, whether it's Seeking Alpha Premium by itself so you can do your own research and find strong buy quant stocks, or whether you make the jump to Pro. For $89, you can try Pro. And what does Pro get you? It gets you this upgrades and downgrade section where it gives you daily stocks that have upgraded to the strong buy quant. Okay, whatever tool it is, if you're following me, I think these tools are well worth it. This is how I manage my portfolio. So if you have any questions, even my email address is up here on the Daily Stock Pick. All the socials are up here. You can join me on X. You can join me on Substack. You can join the private Facebook group. You can join me on Instagram. You can join the Reddit community. Whatever you want, they're all up there. So have a great weekend. I will talk to you later. Bye. Okay, now I'm going to turn off my do not disturb just in case I have an electrician coming for today. Let me put this into iMovie. And I know I got to be off here by 10 o'clock today. I don't think there was anything amazing. I think Wednesday's show was much better than today's. But today's had a, I mean, you can't go over, you can't dispel that Sidekick wasn't awesome. Okay. That is good. Okay. Wah, wah. Sidekick kills it. Wah. Okay. And we're going to put this title in. Export. Next. Save. Travis, you're never late. Thanks, Larry. Yeah, the Credo info's great. Aim for adequate and you're rarely disappointed. I gotta go do a thumbnail. That's my next step. YouTube thumbnail. Let's see. CIEN. That's a top 2026 pick. Death cross of 9 and 50. The death cross for me is the 50 and the 200. The 9 and the 50, I don't see it crossing. The 9, I think that's a 9-day EMA. I think I have 9, 21, 50. And yeah, I'm pretty sure that's 9. Yeah. I don't see a cross there, Donovan. I don't see this one as being super bullish. I talk about button hooks in the education section a lot. I do see a button hook kind of happening, and that's just kind of like a half circle. I don't think I can draw a button hook. They don't have a draw tool. They do, but I just don't know how to use it, to be honest with you. But think of a circle, okay? And you put that circle and you draw a line through that circle. And that's a button hook. And you can see how it button hooks down there and loses confirmation on the 9-day. That's what I kind of see here going on with CN. So if you didn't want to remove all annotations, if you didn't want to wait for the 4-hour to get you out, you could take some profits because that MACD is it's incredibly stretched. On a weekly, to me, I'd probably, and it seems crazy. Let me see the value of this one. Man, I'd probably be taking profits. 1.46 with that kind of, year to date, it's up 45%. Wall Street thinks it's a 246. Yeah, I mean, if I were trading this one as part of the 2026, top 2026 stocks, you kind of supposed to let it run. And I think that's what Steve Kress says is, hey, for the year, it's still a good stock. It's not a strong buy, but you look and their revisions in the last 90 days are up. You look and their momentum is fantastic. Their profitability is better than it was 6 months ago. Growth is the same as it was 6 months ago. And the valuation, that's where you get a little rich. The peg ratio going forward at 1.46. It's just kind of average. You know, and light is the top one. Now, is this one a better buy than CN? I don't know. I think I know it. But Donovan, I mean, that's a you call. If you're trading it on the 4 hour, you could certainly wait because it wins 44% of the time. If you bought it down here at 247, I think you've got some playing room there. I don't see the death cross. The death cross typically is the 50 and the 200 for me. So something like, if we go back here, see that blue line? That's my 50. And that blue line crosses the red line. And then when it crosses up, it's usually bullish. It was right before earnings here. Looks like it traded at 80. Now, that would have been a great buy in May of last year. But you would have had to deal with a pullback for all the way till the middle of June to 74. And it got you out with a 24%. So if you're just playing the MACD there versus this one, or I'm sorry, the moving averages versus the entry at 59, that's where the 4 hour really kind of looks better. But I mean, it's extended. I don't want to say, hey, sell it, because that's your call. It's a top 2026 stock, and we've seen those things just kind of continue higher. Yeah. I personally, what the hell is all that? Oh, that's their dryer and stuff. I need to tell Tony I need honey. Personally, if I got in, let's see, you got in January 6th, then yeah, you're significantly lower. I like to trade those 2026 stocks, but it's definitely gone worse. I haven't had super success in trading the alpha picks when I was picking and choosing alpha picks, and I haven't had success trading the top stocks each year either. I'll kind of leave it at that, but I would have done better with buying and holding. Let's just, I think I like this one. Yeah. And the title is, let's just bring this one up. Okay. Let's see. We're going to put this, extend that. And we're going to shrink that down. We're going to take her out. And we're going to take that. And we're going to take that out. And we're going to put in Trendspider. And I'm going to put in elements. We're going to do that. And we'll make this black. Position. Why is Penny crying? And group. And let's see. We'll use this guy. What's going on there? Edit. Magic grab. And we'll just grab that. And let's see if I can change. Yeah. There we go. We'll take that out. And I'm gonna take and position. No. Okay. Let's see. Uploads. We're gonna put in Netflix. I know I have Netflix in here. Bum 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 bum. I'm probably gonna get off here and do this. Netflix. Let's round the corners and Netflix, NVDA. Oh no, I don't want that. Canva is awesome. Netflix, NVIDIA. Sterling. Let's see, I don't think I have Sterling. Industrial logo. Transparent. I don't think. Let me see if they have a website. Infrastructure. It's Sterling Infrastructure. Images. Let's PNG logo. And upload. Downloads. that in. Sterling. Oh, maybe I just want this. Sterling, Zoom. I know I've got Zoom in here somewhere. I definitely had Zoom. Clo. There it is. Zoom. And DELL. I know I've got DELL. Where is DELL? Wah, wah, wah. I know I've got DELL in here somewhere. I guess it's got to be down here. Google, AMD, Meta. There's DELL. Oh. We're just going to insert that. Okay, and we'll share that. Why not? Download. By the way, thank you everyone for the hamburger comments. I've got more to reply to. Okay, let's just go back and we'll go to and grab the description. Oh, come on. Oh. Episodes. Yeah, you get to see my full workflow here. Well, not everything, but a very good amount of it. Oh, they're en route. Okay, I gotta get out of here. My electrician is coming. I will talk to you guys Monday. See ya.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.